just want to get some idea of what the market is like right now. What was it like to get this kind of deal done? We've seen a lot of volatility, there are recession fears. What was it like?
Yes, we are now in a de-risking movement that we've seen over the last few months due to a range of factors, including inflation, Ukraine, interest rates, the Fed's responsiveness, and related uncertainty. So, as a result, the IPOs and Spac combinations performance is down, and they have underperformed in an overall down market. So that's because many of those companies, in almost all cases, are higher risk return type of investment propositions. So to date, IPOs are down, SPACs are down, the SPAC IPOs are down almost 80%. And overall, the market is significantly down, more than 12%. So we have seen SPAC combinations slow down to a trickle because the bar has been raised measurably. And as a result, new issuance of SPAC IPOs are virtually non-existent. So you're right, yeah, the market is incredibly challenging, but that is why we are so excited about E.Go. Clearly, E.Go is a company that meets that bar, and I'm happy to go into greater details about that. But it
Yes.
is a differentiated value proposition for customers, differentiated
Okay.
business model, and a
We'll
company
get
with
to that.
revenue.
Yes, Isabel, we'll get to that in just a moment. Just sticking with the sort of overall environment for SPACs, and good afternoon to you from London. The regulatory scrutiny, is that also something that is weighing on the sector?
The regulatory, well, there's no clarity right now. So what's waiting is the uncertainty, simply uncertainty.
What about the way we go about doing SPACs? So there used to be an equity pipe for SPACs. You guys for this one only have debt instead. Does that signal anything for you from the market?
Well, we don't have there are a range of different products that are being used now for SPACs, and we at Athena have been at the forefront of innovation and of structured products and structuring attractive products that tick both the boxes of bringing the company cash and ticks the box of the risk reward that investors are looking for.
Isabel, we've been talking a lot about EVs during this program. Why is E.Go why is it special? Why have you decided to get involved with E.Go? I mean, there are plenty of big companies now throwing their scale and their buying power, essentially, in some pretty stretched markets at the electric vehicle space. So why do you want to get in with one of these smaller companies?
So E.Go is an electric vehicle manufacturer based in Germany, high quality cars, German built, German engineered, urban electric vehicles, yet one of the lowest cost retail prices in the Western Hemisphere for a fully electric vehicle under 25,000 euros. So this is a company that has a factory. It's building cars. It's selling the cars with over 1,000 cars on the road and millions of miles driven. And it's also a technology company. So I liken the car to a smartphone on wheels. You can plug it in the wall using a regular outlet. And on the manufacturing side, they have re-engineered a model that is built with microfactories, which you're going to hear a lot more about. They went smaller instead of going bigger. So in contrast with other OEMs that are building now gigafactories like Tesla and others, the smaller size factory is a model that allows for adaptable production, a quick factory build, and a smaller number of units required to break even, and a lot of appeal for smaller countries. And this is a company that.
So those smaller facilities, then, does that allow the business to stay ahead of supply chain challenges? So, for example, issues with getting energy. I'm thinking if you're in Germany or Italy, you're pretty concerned about gas supply right now.
Absolutely, and this is purposeful. So the company has had the benefit of watching all of the successes and failures of other electric vehicle manufacturers that were launched years before it. So, and that's had an incredibly positive impact on what E.Go can deliver to customers and to investors. And I can give you examples of specifically to customers, it drives like a race car with the battery storage at the bottom between the wheels, which gives it a better center of gravity and related traction. So it drives like a race car. For investors, for example, the base of the car is expandable, therefore it will not require significant additional capex for future models. The microfactory themselves, the smaller size factories, are incredibly capex efficient because they are sized properly for the production of the markets that they serve. And the company is run by a top-notch German engineering team.
So just to go macro for a second and to follow on Anna's point, if the gas to Germany was shut off altogether from Russia, could this company still do their thing?
I don't know to what extent they use gas, but what I can tell you is that they have observed other businesses and what works, what doesn't, and they've built their entire business model accordingly.
So then let me tack it from another point of view. If they can still keep the lights on and do the stuff, and they can see what other companies are doing, what are they doing in terms of securing the metal supply, like a lithium or a cobalt? We interviewed the Ford CFO, and we talked to him about their deal to secure 600,000, tons of lithium. How do you compete with that when they're already going to be on a smaller scale?
Again, a smaller size factory allows them to run the factory even with limited supplies. The company also uses a material, the same kind of material that airplanes are built with. So an aluminum body that is completely different than what other car manufacturers use for cars. It's more resistant, it's scratch proof, you can replace the body easily. And the company also has the ability to, on occasion, 3D print some missing elements, like a dashboard, for example.
Isabelle, why does this business want to use the Spac route to market and not other more conventional routes, I suppose?
Yeah, so E.Go's going public. It will be listed on the New York Stock Exchange. Concurrently with this transaction, we, as you referred to earlier, we have been able to bring to the company capital structures that are attractive. So we've put in place an ELOC, $150 million facility. We also have our own $230 million Spac, for which we believe we are offering a compelling investment proposition to our shareholders for all of the reasons that we just discussed. But additionally, we priced this deal in this market. We didn't price this deal in yesterday's market, right? And we have, as I mentioned, a very sophisticated capital markets team at the forefront of innovation for structured products, and I think all that had appealed to E.Go. And everyone's getting a great deal here because they partnered with a U.S. SPAC, and a U.S. for them is relevant for the sector, and we got access to what we think is a most attractive